Okay, guys, I think we need to have a talk about Cathie Wood. First off, I don't like to make videos trashing people, so this is not meant to be a clickbait video about how awful Cathie Wood is. I actually really like her and her funds, and they've made me some good money in the past. However, I do see that there is blind optimism and a lot of hype about her funds, and I think it's important to share a bear case so people understand the risk of investing with ARK. So in this video, I'm going to share 5 risks to consider when investing in ARK funds. As a reminder, this isn't financial advice. This is edutainment, so invest at your own risk. And if you're feeling generous, I'd love if you gave this video a like and a subscribe to the channel. Okay, again, to be fair, this isn't to say that you can't make money with ARK. If the market crashes or has a big dip and I want to take advantage of a return to tech and growth stocks, I'll probably buy ARK again. And I made money with them in 2020. I'm just trying to share why they aren't buy and hold forever funds and why they're actually really risky in the short term, especially if this market keeps getting overheated. So Cathie Wood has kind of been the face of this bull market rally, as back in the spring, she was sharing her extreme $4,000 price targets for Tesla, and at first people were kind of shocked and thought she was crazy. But as it started rallying, people changed their tune, and as Tesla went up, Cathie's fame went up with it. Her main thesis is to invest in disruptive innovation. She says she is looking into companies that will shape the future, and that the future will change faster and more intensely than ever before because the rate of development is accelerating. She actually created the perfect funds to benefit from this last year's rally. Lots of credit to her, and congrats to everyone who made lots of money. When the insane liquidity flowed into the growth stocks chasing returns, she was all in on those same stocks. Not only did she have great stocks for last year's market rally, but she had great stocks for marketing her fund. Every time Tesla was going nuts, attention for Cathie went nuts. More attention meant more investors and more success, creating a positive feedback. One of the best things about Cathie and the ARK funds is her total transparency. She tells you every day what she's buying, and you can see her full weights and her investment thesis. This also allows you to learn from her and copy her trades to an extent, which has worked out well for a long time for a lot of investors. I thought it'd be great if more funds followed suit. What a kind thing to do. This couldn't be selfish, right? Wait a minute. And this leads me to the first problem with investing with ARK. She makes money off selling her fund, not her stocks. She is investing for the ARK fund, which is great. The fund makes money. She talks about the stocks she's buying. More people buy the fund or those same stocks, and she makes more money. Not necessarily bad, and there's nothing nefarious about it. It's just the way it is. And people imagine Cathie as investing her own money and holding forever, and that's not the case. She makes money from assets under management. She is chasing performance in order to sell her fund to get more assets under management and thus more profit, which has worked great in the past, but it will equally hurt in the future. While this worked great on the way up, it will work just as bad on the way down. But ARK will already have their commissions while you're left holding the bag. Now, to be fair, you could say that about a lot of funds and a lot of ETFs, but I think it's just a bigger risk with a high-risk fund like ARK. As of last September, ARK flagship fund, ARK-K, made $67 million in revenue. There's no risk to ARK. It's your money that can go up or down, not theirs. They just make money when you want in. That doesn't mean ARK is bad. It's just a huge risk you need to be aware of, so that you don't just blindly jump in and hold forever. Cathie and ARK have been marketing geniuses, and I have tons of respect for her business side as well as her investing. So as Cathie Wood goes on her media tour to promote the fund, people buy the stock she's buying and they go up, and then she looks even smarter. The more people buy her fund, and she buys more stocks, and those stocks goes up, and she looks even smarter. She has brilliantly created and benefited from a positive feedback loop for her investments. So why could this be bad? It's making everybody money. The same feedback loop works on the way down, especially with illiquid stocks we will talk about shortly. For example, as the market dipped in February of 2021, ARK dipped even harder, down 30 points, as outflows of the fund lead to more selling and a greater depreciation in price of the stock she holds. The longer the bull rally goes, the higher risk is that ARK will lead the way down. ARK invests in a lot of low float, low liquidity, small cap stocks. When she buys those stocks in large amounts, ARK will move the price up, all on their own buying. Again, creating another positive feedback loop. People see those hot stocks ARK buys and they buy too, pumping up ARK funds at the same time. However, if people get spooked out of the market, like over the last few weeks, she has to sell. If people leave her fund, she has to sell. Her selling alone makes those small illiquid stocks fall. CRISPR, which ARK holds a large percentage of, has moved a ton based on ARK's buying and selling alone. This kind of creates a pump and dump effect, and this is why you need to be careful following her stock. I bought into the idea of CRISPR being the future, but I was always nervous of the price, so I never went in too heavy. But as I watched it rocket, I thought I missed the boat. But as you see, when ARK was buying in heavy, she was able to help move that price drastically. Then, when the outflow started and she was forced to sell the stock, it tanked. She has less effect on a huge cap like Apple, but a small stock like CRISPR will get pumped and dumped as she moves in and out. I'm not saying she pumps and dumps on purpose, it's just the resulting effect of the fund. The follow trade. So if you follow her trades, just be aware that if it's a small cap, you're at a big risk of her selling and the stock dumping on you. The other risk of following her is the false confidence in a stock she buys. For a while, I thought if she's buying, then it must be a good time to buy. And to a certain extent, that trade has worked for a long time, and it might continue to work in the future. But here's the catch. She has to buy stocks, even if it's a market top. I've seen a lot of YouTubers over the last week advocating buying the dip as the tech stocks sold off heavy, especially in Tesla. They might be 100% right, but one of the reasons of pumping the buy the dip story is that Cathie Wood is buying the dips. Seems logical, right? This smart investor is buying. I can't go wrong buying too. Now that reasoning might work while you buy hype stocks in an uptrend just fine. And it might work this time and next time. But here's the catch. She is an active managed fund that needs to stay invested. Just because she's buying doesn't automatically mean it's a bottom. She theoretically could keep buying Tesla all the way down. Cathie Wood has always been preaching having long time horizons, which I appreciate, as that's the correct way to really look at investing. And she's also constantly warning of a major crash, and that her fund could get hit. I think she's trying to be honest and honestly warn people of how risky her funds are, while also probably hopefully encouraging people to ride it out, so she doesn't have huge outflows whenever there's scary times in the market. Because she knows how possible and maybe inevitable it is. And I think that is a sign. If we get the doozy of a correction that she's warning of, then I think we will all be wishing we took some profits in our ARK investment. For some perspective, in the late 90s, there was the red hot Janus funds that had a gutsy all-in high growth approach. They ended 1999 with 47% positive returns, and then got crushed when the dot-com bubble crashed. I worry that if we are indeed in a market bubble, that ARK could be the modern Janus. So what does this all mean? Should we all sell all of our ARK funds? I don't know. You need to decide your own risk tolerance. If the market wants to continue its bull run for a while, then this February dip in ARK might be a great time to invest for some near-term gain. However, the longer the bull market goes and the higher the PE climbs, the more I'd be inclined to take profits. I think Cathie's great, and I have tons of respect for the success of the fund and her business and her as an investor, and I appreciate the money I've made with ARK Invest. I just think it's worrisome that nobody is talking about how risky the funds are, so keep those risks in mind and happy investing. Who knows? I might get tempted to buy this dip for one last ride, but I know I want to be off when the party's over. So thanks so much for watching. Please like and subscribe. I'm Joshua, and I'll see you in the next video where we keep learning how to make our money, make more money. Peace.